Welcome back to Rockstock Channel. It is Thursday, March 27th, and today we are back for the first time in a while with Keith Coughlan, the Managing Director of European Metals Holdings, on the back of some exciting news announced earlier this week that its Cinovec Lithium joint venture in the Czech Republic has been selected as a strategic project under the Critical Minerals Act by the European Commission. The news sparked a strong rally in the company's shares in London and Australia, where the company trades under the same ticker symbol, EMH. EMH's stock price is now 13 pence in London, or 25 Australian cents, equivalent to about 65 million Australian dollars. As a reminder, RK Equity is a strategic advisor to and an investor in European Metals Holdings. We are not financial advisors, and nothing in this video should be construed as financial advice. Please do your own research and read the disclaimer at the end of this video. EMH's Cinovec project is the largest hard rock lithium asset in Europe. The company holds a 49% in the project, with the remaining 51% held by one of Europe's largest utilities, ČEZ, which is 70% controlled by the Czech government. So welcome back, Keith. Rodney has a bunch of questions here, but the company has the stock price has suffered in the absence of a lot of news flow over the course of multiple months. But it's nice to see a very significant reaction to the stock on some substantial news. So look forward to kind of getting into that news with you.
Well, thanks, Howard. Hello to you as well, and to Rodney. Thanks for having me back on the program, guys.
Right. Let me kick off. Howard mentioned that news, but Keith, earlier in March, Cinovec was also declared a strategic project by the Czech government, which on the announcement looked like it comes with benefits like an expedited approval process and a reduced administrative burden. Can you just elaborate on all of the benefits that come with that classification from the Czech government?
Sure. No, by all means, Rodney. So firstly, it's a little confusing. The Czech designation is strategic deposit, whereas the CRMA strategic project, but ostensibly the same thing, and adding the same sort of benefits, but the Czech designation doesn't come with funding benefits. But it's extremely important to have the full support of the Czech government. Yes, our partner is partially owned by the Czech government, but this, of course, doesn't guarantee any sort of rubber stamping at a government level. You still have to go through all of the processes and what have you. So the formal designation as a strategic deposit is very important from the point of view of helping speed up the process of getting the project through to production, and just highlighting the importance of the project in the Czech economy and on the broader scale in Europe in general. As you rightly pointed out, an expedited approvals process is the first of those tenets. They reduced admin. The designation talks of inverted commas, a one-stop shop. So what that means basically is you don't get handed around various departments in the government, for the one permit that you might need. And that, that might not sound like a lot, but it's pretty important because, you could have a situation, as we have previously, you make an application to extend a drilling permit or something, and it goes from one department to another department, back to the first one, on to the third. And, before you know it, you've wasted 3 to 6 months. That might have been enough to miss the window of the drilling season, in a climate like that. But it just adds time. Which adds cost to the project. So having it abbreviated, having it streamlined is extremely important to us. It also just makes things a more pleasant way of doing business. So that's very important to us. They also talk of an expedited process in approving the EIA, which will be an important step for us later in this year, and obviously a very big part of the project from a statutory point of view. And then there are also other more exceptional sort of powers. If there are unreasonable blockages to the project, then this designation can help remove those sorts of things.
And then in terms of Cinovec being declared a strategic project, as you said, under the EU Critical Raw Materials Act, in practical terms for the JV, what are the additional benefits that come from that?
Well, there's the same sort of talk of streamlining the permitting process. The wording is something like a shortened and streamlined permitting process with absolute maximums on how long certain permits can take in coming to fruition. So that's good. And, defining a permitting process, giving certainty to that process goes to giving a greater level of confidence to investors. And that's important. When we first became involved in this project, investors from other, perhaps more mature mining jurisdictions would always ask about the permitting process in Europe, and it was seen to be slow and it was seen to be hard. And, that was fair sort of criticism in a lot of cases. It was slow and hard. But when you can deliver concrete permitting timelines, it gives investors a greater degree of confidence that you're going to get the project done in the timeline you're talking about. But the other key tenet of the Critical Raw Materials Act is the access to financial assistance. And that's obviously something that we would greatly welcome. I mean, we'd welcome both factors, but, financial assistance in the form of perhaps additional grants. We've already been approved for one grant, pre-approved. But, perhaps, the sort of debt that EIB and amongst others might be able to provide to us will be very important in getting the project funded and built. So this has been a process. The CRMA initially was introduced quite a long time ago, and it was on the back of the Biden administration's IRA in the US. And it's taken a considerable time to be enacted. And part of that is because, whereas the US is one country with a central government and a law can be passed quite quickly, we don't have the same situation in the EU. And, it's a collection of member states. Things take a while. Everyone has to agree. Things get debated for a significant period of time. But what it does mean is that when they do collectively move, it can be very decisive. And so in determining what conditions might surround a strategic deposit status, the Czech government has had the benefit of looking at the draft legislation for the CRMA and able to mirror that sort of thing. So I see this as being a series of decisions moving up the chain of command, if you like, to basically say Cinovec is going ahead. We are going to support this project and it is going to go ahead. And I think the next step we'll see in that chain is the final approval on this Just Transition Fund grant that we first reported to the market perhaps 12 months ago. I can't even recall. It was so long ago. But, this is a 30 million euro grant to the project to help with some of the early stage expenditure. We received the final approval from the JTF committee in December, but then the final approval has to come via the Czech ministry. Now, it would make sense that Czech government has endorsed the project. The EU's now endorsed the project. So I'm fully expecting to see the relevant Czech ministry providing the final approval on the Just Transition Fund grant and 30 million euros sometime within the next couple of weeks. What it also does, I think, is it opens us up to potentially being able to be in line for other grants throughout the EU, and there are quite a few of them that have emerged over the last 6 to 12 months in this space. The German government has announced a 2 billion euro critical raw materials fund. So for EU projects, European projects that benefit German industry, and clearly we think we'll be one of those. The French government, through a JV within Fravia, has done a similar thing, similar amount of money. And, all of these initiatives, and there are others as well, but all of these initiatives are other potential sources of grant capital for us. But as I've said, you've got the EU, the Czech government, and others all starting to move in the same direction, and that's clearly what we want to see. I don't think it was any coincidence that last Friday, the European Investment Bank had a press conference and announced that they were doubling their lending into 3 key areas, one of which was critical raw materials. And they made a statement just last Friday that they had an additional 2 billion euros that they were looking to deploy into critical raw material projects that tick their boxes this year, calendar 2025, which is clearly at the time that we will be going to them formally to seek financial assistance with the Cinovec project. So, though none of those organizations operate in a vacuum, they all talk to each other. No one wanted to be the first, but now that the first support has come, the second one comes quickly, and I believe others will come as well.
That's great. And Keith, Ches, their thinking on Cinovec, is this, would it be fair to say that it's a fairly high priority for them?
Yeah, look, the most senior Ches person who I speak to, not to be confused with the joint venture company executives, but the most senior Ches person I speak to sits on the main board of Ches. He's the deputy chairman. He's an executive. He's the head of strategy for the entire Ches organization. He's the guy who speaks directly to the ministers. And I can tell you he is committed to building this project as I am.
Fantastic. Previously, Keith, the target release date for the updated DFS was by the end of the second quarter this year. Is that still the plan?
Yes, still on track for that.
Okay, great. And securing an offtake partner, is that reliant on the definitive feasibility release, or is that process far advanced already in its own right?
The process is far advanced. It kind of slowed up. We're talking mainly to German organizations, which I don't think will be any surprise to anyone. I don't think I'm giving anything away by saying that. We've recently had a federal election in Germany, which slowed up those discussions a little. But I was in Europe last week, furthering those conversations, and I would say that the current global geopolitical environment in which we find ourselves and the uncertainty that has led to has perhaps enhanced the urgency of those discussions from the other side. Now, we're still trying to set offtake in a metal that's trading at a very low price relative to where it's been in the last couple of years. And so, there are still challenges with that, but we are looking to secure offtake that has, a floor and ceiling mechanism in it. So clearly we'd still love to see a slightly better lithium price, but those discussions are proceeding. They're not reliant on the publication of the DFS, which I think was the first part of your question, but I think they'd be enhanced by the publication of the DFS.
Great. And you've mentioned it. Do you feel like, in terms of who the discussions are with, do you feel like the latest 25% tariffs from the US and I guess geopolitical tensions rising in general and the slowdown in the Western OEM auto sales in China is likely to nudge, the likes of VW to shift focus back to their domestic markets to kind of get sales volume back?
Yeah, look, I think so. Most of them have at least 3 silos of EV production, being Europe, China, and the US. And they do tend to focus where they're going to get the greatest macro assistance. It was like trying to talk to someone like GM when they were getting IRA assistance. They're not going to even think about looking at Europe. They're going to go only in the US and places with a double tax treaty with the US so they can get that benefit. And the same is clearly true of the European OEMs. So as the EU and the various governments, Germany notably, up their support for the thematic, then there's greater benefits to those OEMs to deal homegrown, and all of them want to secure a portion of their European lithium needs, battery metal needs, but obviously I'm focused on lithium, from within the region if they can.
Yeah, which makes complete sense given what's happening, and possibly we might see export restrictions and strategic reserves being built up all over. So
Yes, CRMA does actually touch on that. If you read the whole act, I can't remember the specific wording it uses, but it does talk about potential, cross-border protections.
yeah, which makes I think makes sense. So it's fair to say then, Keith, with all the geopolitical turmoil that the EU now understands, they took their foot off the pedal a little bit on localized supply chains. They're back on track.
It certainly feels that way, Rodney, and we're seeing strong wording in announcements and what have you. We'll know for sure when we see the first piece of real action. Potentially a first deployment of real capital, or the first piece of true permitting enhancement and shortening. Then we'll know for sure. But certainly, the aspirations are strong, and they seem to be serious about putting them in place.
Right. Howard?
Okay. Yeah. So it sounds like, that just transition, if that's a couple of weeks away, that would be like amazing news. But the other fund, that's Czech specific funding, but I didn't realize, I didn't remember. So when you look at the region, you're right in Central Europe. You have like BYD is building in Hungary. I think, there were announcements. I think CATL is also building. CATL with Stellantis.
Cattle's down the bill with Stellantis down in Spain.
In Spain.
Yeah.
But when I think about the Germany has increased defense spending, there's definitely been a reaction to Trump on the NATO aspect and the defense aspect, and also obviously on the tariff aspect. It does seem like Europe does follow and react to what's happening in the U.S. So the strategic announcement or strategic project, or 47 projects announced across multiple commodities in lithium. There were a few others, but you were only one of 4 lithium mine projects that got the strategic project designation. There was some kind of downstream processing, and some of them.
Yeah, the vast majority of those 47 projects are not mining projects.
Right. Okay. And you reminded us before we were chatting that the EU has set a target to have 10% of their raw materials, come, within the EU.
So the aspiration is 10% of all the battery metals consumed in Europe in 2030 to be mined in Europe, and 40% to be processed in Europe. So clearly, because of the outsourcing of mining by Europe, a few decades ago, there are far fewer mining projects than there are processing, factories, chemical factories, and what have you. And I think that's the basis or the history behind that difference between 10% and 40%. But at the end of the day, what it does, it gives rise to a number of lithium processing projects in Europe, but they still need to be able to source the raw material, and there are only obviously a very limited number of potential mines in Europe for it, and a smaller number within the EU. And you do still need to differentiate between what is EU and what is Europe, particularly at the moment with the geopolitical issues.
Right. I noticed Yadar was not given strategic project status, but I guess maybe that's because they're not in the EU. But if Rio wants to go ahead with that, they can. I think they have a full plate with everything else that they've consumed at Arcadium. So this EIB increasing their fund, that was new information last Friday. That's just 2 billion this year for critical minerals, is what you said.
2 billion euros this calendar year, 2025, deployed in the critical raw materials. And I'm, if they mean by that mining projects, I can't think of enough battery metal mining projects in Europe that will get to the stage of qualifying for that money. So again, that's a very strong aspiration, and one obviously we would welcome.
All right. Well, let's get the DFS out pretty soon, and you start that permitting timeline. I guess a commitment from the EIB would be a loan, more than a grant, and it would be a conditional loan that would be drawn down over time as you need it. But getting the package, you have appointed other strategic advisors. I think you had mentioned on prior calls that are helping.
The Azure and the Texas team have been advising us on, the overall structure of, potential debt/grant funding out of the EU.
Right. Okay. And Ches, again, to remind viewers, is one of the, top 10 utilities throughout Europe. We've been talking on some of our recent podcasts, the demand for battery energy storage is growing, so much, and might certain utilities like in the United States, they're big purchasers of lithium. You're the only company that I've identified. Maybe there's some others that have a utility partner as the partner. So we talk about like big oil, big mining, and other, industries, West Farmers, diversified, coming into lithium. Ches as a utility coming into lithium. Can you just remind us of their activities? Because I know they have some solar operations, but are they buying batteries as part of, an integrated?
They're not yet. They do own all of the electric vehicle charging stations throughout the Czech Republic. They do still mine coal and generate power through burning coal, but as part of the whole regional transition, they're phasing that out. In fact, the site of our lithium processing plant was historically one of the largest brown coal power stations in Eastern Europe, way back when at EPR1 at Prunarov. Ches, so despite the fact that Ches still do mine coal and generate electricity that way, and they have to, there's no other, eventually they will no longer, but it's not a tap you can turn off overnight. But they also are a shareholder in Europe's largest onshore wind farm in Romania. They have significant solar power assets. They are in the process of starting to deliver on their nuclear aspirations with small nuclear reactor programs, one of which will be sited quite close to Prunarov, the site I mentioned earlier, and may provide power to us, to our processing facility. But they have committed to providing green energy to the Cinovec project, and they already have sufficient capacity to more than power our requirements with solar alone. So that's clearly very helpful. They're a publicly listed company, despite being 69% owned by the Czech government. And I think their market cap is about 28 billion euros.
28 billion euros. Okay.
I think so. I'd have to check and how.
Okay. So a very strong, well-capitalized partner. And we've talked about this a while. I think they came in 5 years ago in 2020, or almost exactly 5 years ago at this time in the super dark days of COVID. And you decided to sell basically 51% of the project. You're a single project company, and everything's kind of slowly then suddenly. Ernest Hemingway, sun also rises. I think we've mentioned that in a lot of cases, but European Metals Holdings, we've always thought as the largest hard rock, asset, right in the middle of Europe and right next to Germany, should have some great partners. But, VW had all these like prior announcements. They were going to build tons of battery factories. There has been some scaling back of aspirations, but nevertheless, the continent is moving forward. And now under the Trump administration, they're reacting, $1 trillion of defense spending from Germany, is very significant. European stocks have been outperforming defense stocks in particular since the beginning of the year. So there are new themes happening, and it seems there's an acceleration of news flow happening with respect to critical minerals, and great designation, one of 47 overall projects, but you're a very advanced stage, and fingers crossed. Good luck in the next kind of couple of weeks with that just transition potential money, and further progress the rest of the year. Anything we missed, Keith, that you want to say before we sign off?
Well, if I can ask you guys a question, what's your outlook on the lithium price?
Well, Howard will point you towards YJ in that interview because he's
I watched
very bullish.
that.
I think for sure, Keith. I tweeted today on an individual energy storage project that was 6 gigawatt hours. So the numbers are just substantially bigger than anyone thought. So the question will be, and the feedback from some of the industry is like Africa is pulling back. There's less coming out of there. So I still have oversupply for this year and next year, but we're not talking about a material amount. The question is, who's going to blink? Because as it stands, I can't help but feel, and as a shareholder of some of these, companies, is why would you run down your mining reserve to make no money? It makes no sense. So I think it's in everyone. I think price discipline will come from the ex-China producers. It's a case of what can CATL and the other Chinese guys drum up. But energy storage is finally getting its recognition. I see even Canaccord, which was slightly more bearish than what I am, and YJ have quite a high energy storage. So everyone's well above 1,000 gigawatt hours. YJ is at 1,550 and in 2030, and I'm at 1,400, and there's definitely upside scope. So, as I said to Howard, it's always good because every month that goes by, we're a month closer to a turnaround because it must happen. But I would think that if you got approval and final investment decision and started to turn soil, you'd probably time it well by the time the plant was ready. So 2027, I would say, would be a good timing. Yeah.
Actually, one question I forgot to ask you: carbonate versus hydroxide, given LFP's resurgence and maybe well, not resurgence, but anyway, growth in market share, and as well battery energy storage solutions. Do you have a thought on that, or will we partner?
Yes. So our DFS is on carbonate. We have a PFS on carbonate and a PFS on hydroxide. But the strong preference is to produce carbonate. And the offtakers we're talking to all of them have gone from only wanting to talk about hydroxide, even as recently as 12 months ago, to being very happy to talk about carbonate. They'll still talk about hydroxide. They'll still buy hydroxide, but they're very happy to buy carbonate. And when we spoke about conversion facilities in Europe, as part of that 40% versus the 10%, there are a number of parties building conversion facilities that will turn carbonate into hydroxide. So you would always have an option for toll treating in the region as well. I don't know what the economics of that would look like, but you cover it at the time.
Sounds good. All right. Thanks a lot, Keith. Great update. Great to see the good news and stock market reaction. It reacted on the Czech strategic news, and then it reacted on the EU strategic news. I would imagine if you get $30 million from the energy transition, maybe it'll react for that too. Okay.
All righty. Thanks very much, gentlemen. I appreciate it. Always good to talk.